Hey everybody, welcome back to our weekly podcast. We missed a week. That'd be my fault, as I was in AAC doing a little bit of training. But my name is Patrick Tan. I'm the general counsel for Chain Argus. With me, as usual, well, as it should be usual, our CEO and chief data scientist, John Ryder. And but we've got a couple of things to catch up with you on this week, given that we were away last week. Um, we're going to talk about the ERC 4337 bug. The Poly Market is suing the state of Massachusetts. Is that correct? Am I reading this wrong?
Well, there are like 400 suits around, but yes, that's one of the yeah, yeah.
Okay. Then we'll look at what Kalshi is saying as well in relation to that base, which is the topic that we that comes up on the podcast from time to time. But there's a couple of Cointelegraph articles about that, especially with respect to the actual underlying software architecture that I think are worth discussing. And then finally, we'll end off today's episode with latent ABS issuance. I have no idea what that is. But John will have all of the deets and the context for us that. But let's get just let's clear the stuff that's relatively easy to clear first. What's the ERC 4337 bug?
Well, so this is a account abstraction related code, and it's a bug in the code in the sort of standard wallet implementation.
Okay,
And it turns out that there were a bunch of, well, some trust assumptions in that code that
fair
weren't
enough.
consistent with the specification. And so some problem, whatever. It's what's known as a griefing attack. So there are ways to make people spend gas pointlessly without their transactions occurring. It's kind of like a denial of service, but it's a denial of service where you also lose money. That makes sense. So it's a problem, right? You can
That sounds like a problem.
is
Yeah.
that censorship? Like you can block access. And I guess the entire point here for me is this account abstraction stuff is complicated, and I don't
Yes.
mean intellectually complicated. I mean there's just an awful lot of material involved, right? They're
May-
trying to
may-
do stuff that's got lots of pieces and related
well,
moving parts and the rest of it. Um,
simplify this a little bit for me. What do you mean by account abstraction?
well, so the idea here is that using the system is too complicated, so you need ways of making one click do more stuff.
Okay,
They
fair.
want to make it easier for people to write wallet trading, whatever front end systems where a single click can do more things. So you can
Mm,
delegate more authority to right, the traditional system. The historical way this worked is you had some code that generated a transaction for signing, and
yep.
they were discrete things. So send the money here, approve the spending of this, whatever. The classic example, I guess, in that arrangement is you had to approve delegation of control to another contract, and then you had to approve the sending of funds to that contract.
Okay,
Right? That's a classic example of a thing, and it's a pain in the ass, right? Why do I have to do this twice? Normally, you enter your card number and send, and it pays. Now, these days, you get a 2FA thing. So, are
yeah,
those the
yeah,
same or not? Yeah, but
yeah.
it's that you can see how this would be more of a problem if you need to, interact with a service that's more complicated and it's a 3-step, 4-step, 5-step process, or you want to
Fair.
go let some trading bot, execute some VWAP thing and rebalance across a couple services or whatever. You have to keep clicking approve. But so this is a way to, I'm speaking a little bit generically here, but to delegate control to some more complicated code that then goes off and does stuff all at once with that control. Fine. Um, Obviously, that's more complicated than just here's a discrete operation, approve it, don't approve it. And yeah, unsurprisingly, that's causing problems. This particular issue is it's subtle in that the user won't notice anything's wrong until their transactions just don't work. Then transactions in a web browser sometimes don't work. So, you can't diagnose it as an end user. Even looking at the console, you can't, it's hard to diagnose. Um, yeah, I think because you're talking about handing off control to code that can do arbitrary computation, right? There are obvious limits on how much validation you can do, and you're just going to keep patching this. And we talked previously about how a related delegation account abstraction feature, more than 50% of the usages were linked to theft. Right. So it's, convenience makes it convenient to steal. The whole debate around whether, Bitcoin enables cybercrime or whatever, this kind of thing is about how if you have a better way of exfiltrating proceeds of crime, you'll probably have more crime. I mean, that's a broad statement. But, so
I
here what they're seeing is that it's very hard to do these things in a safe way. It sounds easier to write the code. Making the code easier to write does not make the code safer. I mean, this is like people who think shorter programs are safer than longer programs. First of all, defining
mm,
shorter is complicated because if you refer to another piece of code, does that count or not? And also, it's just not how the world works, right? Simple stuff is usually easier to understand than complex stuff, but that
fair.
isn't the same as more stable, more secure. Uh, you drive over a bridge and there's those rubber inserts,
Yeah,
right? Those add complexity, but also they prevent the bridge from exploding when the temperature, from buckling when the temperature changes.
correct.
Yeah. Right. Complexity is sometimes makes it
In the same
better, not
way,
worse.
a haiku is short, but it may not give you the richness of experience of a
Uh,
novel.
being pithy and yeah, dense content, all of this, it's complex, and you can't just assume that making it easier to write the code is going to make it more or less secure. So this type of problem couldn't have existed without this more complex delegation mechanism. And there's a whole family of these types of problems that exist now. So, okay.
Oh, and correct me if I'm wrong, but it seems to me that part of the problem, of course, is that you want, well, not you, but there is an obvious demand for the simplicity and ease of use of a centralized service for which there is a customer service hotline that you can call should something go wrong. With the immutability and permanence and decentralized offering of what these things offer.
Yeah, I mean, it's another variant of the self-service bug bounty, right? So, okay, like if you want to test it this way, that's fine. That's the way the testing will occur. I mean, in this case,
Yeah.
there were no losses associated with it. It was
Yeah. I
just
get that. I
an
get that.
error, right? But there are clearly related issues that cause losses, and the
I
other
mean
example we talked about is
there are
primarily
inherent
theft.
trade-offs and limitations which I'm not even sure if they can be overcome, but even about being overcome, I'm not uh,
Well,
there are limits.
if your validation process is not airtight and
Yeah,
transactions are not reversible, there will be
correct.
issues.
There will be, yes.
That's a 50 word. It's
That's
not
like
complicated. Right?
that's like being
No.
passengers on a plane at the same time that the plane is being sent for flight testing. Um,
Yeah, no, they are doing this is the testing, right?
yeah,
Releasing this to production is the testing process. That's the
correct.
official testing process.
That's an interesting approach. I mean,
I mean, it's good or bad, whatever, but like that's
yeah,
the approach.
I'm not, it's not a value state. I mean, it's not a value judgment. I think it's an
I mean,
interesting
you had a
approach.
variant of this with
Hmm.
Solana a while ago where, the Solana system has a lot of pieces, it's complicated, whatever. And then when they would start to have, the chain would freeze and there were problems and fixes, the explanations of the fixes just got more and more ridiculous because they were, using the technical vocabulary of the system. They invented their own vocabulary. And they, just the whatever movable nonce update function. I forget there's one that was particularly, it was a sentence that made sense if you knew how the system worked, which was just crazy otherwise. Yeah, you're going to start to have more and more problems where the severity has nothing to do with how understandable or idiosyncratic to your system the explanation is.
Well, it's a hard problem, hard one to crack. Okay, I'm interested about the poly market stuff.
Oh, so
I don't know.
Kalshi and Polymarket, yeah, this is a
Yeah.
whole mess.
Okay, so for a bit of context, Kalshi Poly Market are prediction markets. I've always been somewhat um befuddled, I guess is the word to use, given that a betting contract, well, a prediction contract, if you will, on sporting events. I don't know, man. It seems really close to sports betting, but they somehow managed to get some kind of an exemption and to define these betting contracts as commodities.
Well,
Uh,
did they get an exemption? That's the
that was the
question, right?
question I
They
had.
got,
Exactly.
yeah, they got the CFTC to tell them they got an exemption, sort of. So your comment foreshadows. So the CFTC released, well, submitted whatever an amicus brief in one of these cases. So Kalshi and Polymarket are both engaged in lawsuits all over the United States with states and all kinds of things. So we're just going to speak generically and not worry about which state is which filing this
Yeah.
thing because they're all the same issue. Uh, so I'm just going to quote two lines from the CFTC's brief here.
Okay.
States cannot invade the CFTC's exclusive jurisdiction over CFTC regulated designated contract markets by
Okay.
recharacterizing swaps trading on DCMs as illegal gambling. Okay. And later,
Okay.
and this other comment is almost word for word something we've said previously, states could characterize any derivative as prohibited gambling, thereby subjecting nationally traded swaps to a patchwork of state restrictions. Right. So, the second one is exactly the sort of intruding on the states' rights and the states being allowed to express their rights. Controversy we've talked about before. Um, yeah, you're highlighting that they've managed to get the CFTC to say that their sport event thing is the same as now. I gotta say, betting on who's going to get the MVP
Hmm.
and betting who's going to win an election are pretty much literally the same thing because they're voted by some population in both cases, right?
Yeah,
So,
that's true.
right. And in the same sense, betting who's now, does the team that wins the same as the person that wins an election? Those are not quite the same,
Hmm.
right? But the team that wins is very much like who wins the card game or the,
Yes.
game of chance. Because, I'm not trying to insult any professional athletes here, but like compared to the rest of the world, all of the NBA players are equally good. There are obviously differences within the league, but in every
Correct.
sport, like is basically a bunch of skilled people competing with each other. And then, you don't have you don't routinely have teams that go, undefeated and beat everybody with a ridiculous. That's just these are, similar to games of, is poker a
Well,
game of skill
the
or chance? Is it
Patriots
gambling? I
went
don't know.
14-0.
There are occasionally examples in leagues. Well, it's really a American football thing because the season is short enough that it's possible. No one in
Yeah.
baseball is going to
It's
win
not
on a
common
gambling.
though, I'll give you that.
Yeah. So anyway, yeah, the issue is, look, it's this pornography, right? I know it when I see it.
I
Is it
know, I
gambling or
know.
not? Right.
Yeah, that's a
So the
famous, yeah.
the exemptions they've gotten themselves rely on the CFTC having the authority to declare that that particular thing is legitimate commodity swaps trading and not gambling. And, gambling isn't defined. Yeah, I guess it's defined in the same place as pornography is defined, right? It's not defined in the law. So for people who don't get that reference, there's a famous old U.S. court case where a Supreme Court justice wrote,
I don't
defining
know.
pornography is difficult. I
Yeah.
know it when I see it,
I know it when I see it.
and
Yeah.
fair enough, right? It's difficult to identify these
Because I
things.
think the issue and the question in that case is whether or not like I don't know, like nude impressionist art, like the kind of paintings that
Yeah,
Epstein likes on his walls.
uh,
Is
okay.
that
I
art?
think like photography that's not is probably the closer, but whatever. Um, yeah, this is common law, right? It works by example. So they have an example they have to adjudicate, and then they adjudicate an example. So you're, it seems to me like you're going to end up with the Supreme Court having to provide some test for
Yeah.
what's gambling and what's legitimate commodity trading. And if the test counts wagering on who wins a sporting event as, because sporting events are not complete random chance in the way that roulette is, right? There's more skill
Yeah.
involved in
Fair enough.
basketball, whatever, than there is
Mm.
in roulette. Has no skill. Uh, Maybe being good at cheating, but there's no other.
Yeah,
Um,
but it's
so
not skill based.
if the presence of any dependence on the participant's skill is enough to mean that you're not gambling, that's a massive change to all kinds of things. All right. So
But
I don't know.
that's
I don't think that'll be the rule. They have to come up with a
that is
simple
a
but the rule.
strange, that would be a strange position to take because there is no
That's effectively
analog.
the position the
uh,
CFTC is taking because
Correct,
they're
but
allowing.
it is a strange position to take when you consider that commodities contracts, first of all, what were commodities contracts meant for? The reason that we have a CFTC and the reason why we have derivatives and swaps and futures and stuff like that is well, essentially to protect primary producers from the vagaries and the volatility in the price of commodities as they move from time to time. Because a farmer or a miner and stuff like that, they need to know that they can get a fixed price for the stuff that they produce. Otherwise, it's extremely difficult to plan from season to season. That's how it started.
I mean, that's true for agriculture, but they added financial
I
instruments, and
understand, yeah,
so like,
but if we go back to that there is, that element of that, and we get to sporting events and stuff like that. I think that's where it becomes really, it becomes a little bit more tricky to, and also it doesn't help that sports betting, until fairly recently in the United States was illegal in most states.
yeah, it's only what is it, 2018 when the Supreme
Yeah,
Court
it's
rearranged the
real.
way that. So it would be interesting for them to decide that sports gambling is illegal, and for them less than 10 years later to decide that it's not gambling at all. It's just commodity swap trading.
Ugh.
That I mean, look, okay.
Possible.
I mean, essentially what they ruled at that time was that it was not uh, possible to do this ban, right? That the
Yeah.
Constitution doesn't mention gambling, and so you pretty much can't just
Fair,
outright ban it.
fair.
Which is,
Yeah.
the gambling is not in there, so fair enough. Um, it was a thing the states could regulate. The states could decide to regulate it, and the states regulated it. Now, for the CFTC to come in and say, "Well, the states can regulate it, but we're preempting it," it seems unlikely that that's constitutional because the CEA is a federal law and the states essentially already won. The Supreme Court ruling is not word for word this, but the states essentially already won the argument that they can decide what to do about gambling because it's not a power that's delegated to the federal government under. So I guess if we agree that gambling is a state thing and commodity swap trading, insofar as it's related to interstate commerce, is a federal thing, someone has to delineate the line between the two, and that's tough. I
Indeed.
mean, when
Yeah.
your argument boils down to betting on the outcome of this sporting event is the same as trading, wheat futures, uh, they're not completely different, right? I mean,
I
they're not
I can
the same.
see I can see arguments as to why they are the same and different at the same time. Um, yeah, I don't know, man.
No, and what the fight is really over is who gets to approve individual
Yeah,
venues and the rest
yeah,
of it,
yeah.
contracts and
I
um,
think states, especially like the great state of Nevada, would have strong opinions on this one. Um,
well, there's lots of states that don't want gambling for reasons we talked about. The same
yeah,
reason you
yeah,
can't buy
yeah, of
alcohol on
course,
Sundays, right?
of course.
So those places are going to want to not have gambling at all. And if they can't ban it, that will also anger them. I will note that those places, generally speaking, are far more Republican conservative leaning,
Yeah, yeah.
right? So I don't know. This does not break down on traditional left right Democrat Republican lines.
All right. Switching gears a little bit. Base, which we've talked about a lot. Just a little bit of background, a bit of context. You know, Base when it first started, and correct me if I'm wrong, if my recollection of this is incorrect. Um, it never started off decentralized, because it was one of those things where pretty much the same way there's like a fixed group of validators with the promise of decentralization down the line. But the idea was that let's get
Well,
the
there was no
blockchain.
group. There was just one
Yeah,
guy, but
I know, I know. I'm being generous here. Uh, so I mean, it started off basically not being a decentralized blockchain. I'm not sure if that's a fair characterization, but I think with the promise that it would one day be decentralized. And what we're seeing now is a walk back from that. Is that correct?
yeah, so they originally published a plan. They started off as stage zero, 100% centralized, no argument. They
Yeah.
published a plan to get themselves to be more decentralized, which they, delivered the stage one update several years late and then stopped, following the Ethereum Foundation comments about L2 is not effectively working for scaling Base relatively quickly. We've talked about this before, made comments about how it was just going to, keep doing its thing. And they now announced that they're moving off of Optimism. They're going to run their own thing.
Okay.
They've removed Optimism from the Security Council and the rest of the procedures. So
Yeah, I
when I
remember
say
that.
they, I mean whoever clearly runs the system, because, if you can remove the overseers, then you're, the one ultimately in charge. I mean, you own 51% of the company, you can fire the board of directors, right? I mean, it's effectively that. Right? Um, so, and what's most entertaining here is that they did this about a week or so after there were some bugs in the system that led them to uh, halt the system, revert some stuff, and fix the bugs.
Oh, okay.
So they, it all in one brief period, they've asserted that control, and there has been no real mention of their moving beyond Security Council control for decentralization for quite a while. According to their original roadmap, they were supposed to be way past that, past state onto stage two, three, whatever by now, and they're not, and they've just you know stopped seeming to try on that. They're backtracking, so they're now going to provide binary releases of the system code, and seems consolidate control within one group and not even have a pretense anybody else is involved, which is interesting. Look, it'll probably increase transaction throughput because less coordination is more efficient for
Oh, for sure.
everything in the world. So, there you go.
100%.
Yeah. It's not clear how
I
it's legal. And I
That's
still
the
think it's astonishing because Coinbase, of course, has lots and lots of licenses that this explicitly conflicts with. So,
I mean, running a permissionless blockchain that enables the transfer of value with no KYC, no AML, and
Well, it's
basically,
not permissionless. It's that you have total control and choose not to impose any permissioning. Careful, right?
okay, fine. Yeah, that's right. That's correct. It's not that.
It's
Yeah,
open
no,
to all, but it's not,
it's like the
you know,
Hard Rock
it's a
Cafe.
it's a public space, right? Everyone can enter, but it's still owned by some guy, and
Love all, serve all. It's an interesting approach. And then not even trying to make that pretense that they're moving towards decentralization. I don't know. What the response will be, and I'm not sure in terms of lawmakers and regulators when they look at this. Um, Especially given that I think one of the things that came out of DC not too long ago was that, we'll give you some kind of I know there's discussion about that, but like we'll give you some kind of a grace period for when you can actually move to decentralization and stuff like that. And there was a lot of argument and back and forth as to what
yeah.
your legal liability for that sort of you know transitioning period is before it actually
This
is.
thing's been live for 3 years,
Uh-huh.
almost 3 years now.
Yeah.
So, you know, if you look at any of the proposed safe harbors at all, you're going to have difficulty.
Yeah.
Everything was a couple of years, exactly which version, whatever, but nobody's arguing. I mean, 3 years, no progress is not great.
Uncommon.
Well, actually, I think it's quite common, but it's not. I don't think that that's going to get a lot of protection.
Yeah. Yeah, I, I don't know. I'm not sure what the choices were, given the circumstances. Like, continue. To me, I'm a showbiz guy. I would have appreciated if the show went on. Even if you knew it was kind of wasn't going to work, I wouldn't have necessarily declared defeat so quickly.
Yeah, I am surprised that they haven't pivoted to something else with a very clear plan, at
Yeah,
least.
or at
You
least
know,
articulation of a plan.
what was the Mashinsky, like, we're pausing withdrawals so that we can strengthen our position and give
Yeah, yeah,
higher
yeah,
yields
yeah.
going forward. Yeah, at
That is a
least do
very
that, right?
that's a very extreme example of that, but something
I mean,
along those lines.
it's the Ponzi scheme or playbook, right? You
Yeah.
have to keep telling them you're going to find a way to give them their money back. You have to keep telling them there's a way to get the result you want, as opposed to just doing something else.
Yeah, doing something else strikes me as odd because that's not really what the space is known for. I mean,
And they're
even
using the word we with respect to the software in ways that
well, maybe it's
it
the
doesn't sound
royal
like a
we.
lawyer approved the document. No, I don't think it's the royal we. I don't think it's the royal. It's not capitalized. Doesn't that get capitalized?
No, I don't think so. Yeah.
Oh, okay.
Yeah. Um, okay. Well, that's an interesting one. I don't know. I don't know what the situation is right now on Capitol Hill, especially since Coinbase withdrew its support for the Clarity Act, if I'm not wrong.
Yeah, there's
Um,
been random noise back and forth, but there seems to be little, if any, progress in any of this.
I mean, if that bill ultimately fails to pass, um, or if it passes in the form that Coinbase objects to, uh, I don't know if that means that it will be open season on anybody who has an axe to grind on Capitol Hill with Coinbase, given that a lot of them threw their support behind their sponsorship of this bill. So, and
I
Base
mean,
seems to be like the soft underbelly with which to kind of like stick it to them. So I
I
would
mean,
watch
their
this
attempts
space.
to get safe harbors were not particularly successful. I mean, they didn't pull this off, and there was a lot of overt pushback about that. I
Correct.
suspect that the main strategy now is to try to get this CFTC stuff ensconced comfortably, and then
Yeah.
to just rely on being able to, I'll say, influence, however that's happening, the CFTC to continue to provide
Lobby.
approvals for whatever. Well,
Yeah.
I think that's also being a bit generous, but yeah, and the hope that that's sufficient, right? If you can just get the CFTC to delete all the state rules, and you're comfortable the CFTC will do what you tell them, then that's a solution. I don't. I think that's a very risky strategy. There's no way it'll work because I think the CFTC's arguments don't really make a lot of sense. Um, Even if you can't define what gambling is, the Nevada Gaming Commission, to pick a random example,
Yeah.
has, whatever it has historically regulated has to fit within the remit of what qualifies as gambling. there's also there are other states, riverboat gambling, and a lot of the Native American tribes
Yeah.
similarly, like, well, we've been doing all this stuff on the basis of, for a long time.
Yeah.
So you're unlikely to rip all of that apart as having always been wrong.
That's that would be interesting to watch if they could pull that off.
I mean, that's a classic states' rights things where gambling can be defined a little bit differently each state, however each state wants it, right? And coming in and imposing a definition that says every single state has been completely wrong forever. Um, there is, I think, one example in U.S. history where the federal government said to a large number of states, the way you've been doing this is completely wrong, and we're stopping it right now. And that was a bit of a rough incident, and now things don't work that way anymore.
I think they
I
would
mean,
like
there've
to
been
avoid
some,
that.
there's been issues related to that problem for a while, but yeah, I mean that's not that's probably the only thing because that wasn't dealt with very well in the 18th century, right? That's the only example where this massive fracture and stuff, and then the federal government came in and just anyway.
We'll see.
We'll see.
Okay. What exactly is
Okay,
Layden
so
ABS
Ledin
issue? Yeah.
is a company that runs Bitcoin back lending.
Okay.
So they lend money against Bitcoin.
Fair
And
enough.
what's interesting here is that they're issuing asset-backed securities in
Okay.
the traditional ABS market, which is
Okay.
a huge market that people may have heard of from the Big Short, but in general is the
Yeah.
market for stuff secured by stuff, for
Yep.
financial instruments secured by stuff. So
Yep.
this is um, factoring, credit card receivables, mortgages are asset-backed securities, all kinds of secured debt all over the place are asset-backed securities. All asset-backed means is that there's an underlying claim credit enhancing the lending on some asset that's not um, money normally. Normally it's some physical asset, land asset, could be equities, could be an ownership stake in something. Normally it doesn't refer to pledging cash for a loan against cash because who would do that,
That's a
right?
bit of a strange one. Yeah.
Um, and people don't really refer to repos as asset-backed securities where it's a liquidity swap. That's a market
Yeah.
internal type of thing. Okay. So what's interesting here is that because Ledin is now selling these loans, these Bitcoin collateralized loans in the
Okay.
traditional ABS market,
Okay.
they've gotten a credit rating from S&P
Okay.
and they're making SEC filings and disclosures over these registered securities. There's no dispute they're securities. That's
Yeah.
not what this is about. Now, because of that, regular old market lawyers are reading over the stuff and writing the disclosures, and S&P is publishing very interesting research on how these things work. The credit rating agencies, which again got a very bad name in The Big Short and the 2008 incidents, uh,
Yeah.
have a structured finance. They all have their own structured finance ratings framework that is not the same as the regular ratings framework,
Okay.
right? So they're rated double A, triple A, single A, whatever, with a little, in the case of S&P, it's a little SF in little letters at the bottom, parentheses. It tells you this is a structured finance rating, so it's based on the stuff around how you manage ABS, because there are legal risks and other risks associated with that that don't exist for a traditional mortgage or a senior secured corporate debt, unsecured corporate debt. Okay, so I'm going to read you a bit here from this is S&P's
Mm-hmm.
credit rating research report. When they issue a rating, they do some write-ups the first time. They get shorter and shorter as things go on, changes. Um, this is about the conflict of interest present in this transaction.
Mm-hmm.
By its nature, Ledin is a lending business that aims to earn profit by retaining its customer base.
Mm-hmm.
One way of doing this historically has been to allow customers who do not respond to 60, 30, and 7-day notifications about loans coming due to renew or allow them to renew or extend their loan for another year by folding the accrued interest into the new loan's principal. While favorable to customers in this transaction, if a large share of borrowers choose to renew their loans rather than pay interest accrued in cash, it can cause liquidity stress on the transaction's ability to pay fees and interest on the notes. So
Okay.
obviously that's reasonable, assuming it's an accurate description of the data and the transactions. Yep, that's a risk. Fair enough. Um, so I'll note that so they give some details about the portfolio. Generally speaking, these are 2-to-1 over collateralized loans. So the LTV is something like 50%,
Okay.
and the average interest rate is something like 12%.
Hmm.
So I don't know who's pledging, $100,000 worth of Bitcoin to borrow $50,000 and pay 12% on it, but
Maybe.
apparently whoever that is doesn't want to pay the interest. They let it roll. Uh, Fair enough. And in fact, the disclosures tell us that some of the covenants in these documents, whatever, they're required to keep the interest rate at least the average on the portfolio at least 9.25%. So these are not high quality borrowers.
It
Right. So
stands to,
the all of anyone borrowing at 12% is clearly now that's a 2 to 1 over collateral, whatever. But anyone borrowing at these kind of rates is not a great credit. All of the credit enhancement, the credit is only the enhancement of the collateral, right? People who aren't paying cash and who
mhm.
are paying rates this high are bad credits by,
Yeah.
no one who's a good credit would use that facility. It's a terrible facility.
Not only that, it
Um,
stands to reason that whoever's borrowing that money against their Bitcoin may be looking to roll that money into something even more
yeah,
risky to
yeah.
generate more than
So
12%.
as part of this collection of transactions, they are going to start forcing people. This is January 1st next year. They're going to start
Yeah.
forcing them to pay accrued interest in cash. So
Oh,
that is that as a
oh, but you can
that's
see,
agreed terms of the deal. So
but
that's
then you can
probably
see how
going.
that's gonna end badly.
Well, I don't know. It's going to end badly. I
Well,
think
you
what
think
you're
about it this way, right? I
finding.
mean, you get close to the 50%. I mean, like once you get close to the LTV, where like let's say for instance, the accrued interest and the amount that's outstanding on the loan gets close to the point where you have to actually start to consider liquidating some of these assets. That could cause like a massive cascade.
Well, I'm not sure. Okay, so they go on to note that it looks as though that isn't a major problem absent a liquidation issue, because the amount of cash that would be required there isn't super huge. Fine. The
Okay,
portfolio
okay.
may run down though, and if they're going to
Yeah.
find borrowers, right? Now they also note that because this publication came out soon after the big Bitcoin price moved down, roughly from 160, whatever,
Yeah, yeah.
and they had a large number of loan liquidations within this portfolio, all of which was fine. The LTVs never, the average says the LTV never went below about 80%. So
Okay.
they were able to reduce it. And as of, again, when this research came out a couple weeks ago, a week or two, whatever ago, they had a large amount of cash sitting in the portfolio that they had to go reloan. So I wonder if
Hmm.
okay, so that's all of the context here. So what you're seeing is a Bitcoin backed lender is trying to finance this in, regular old markets with people that just want regular, honest descriptions of what's happening. And what's probably going to happen is demand for the product will dry up because once you explain you have to pay your interest in cash,
Yeah.
right? And you're going to have to, because these people are only willing to extend loans at 9%, 10%, whatever. The number of people who want to do that and pay the interest in cash is very small.
I would imagine
So I
so.
wonder, yeah, I wonder how big this really will be now that they're on honest terms. Before you were paying in kind, not paying in cash, but
Yeah,
increasing the
yeah,
loan
yeah.
balance over
Yeah,
time.
yeah.
And the expectation was that the price would go up so that you'd never have to pay your loan back and you could just keep your money. And, I suppose that's nice work if you can get it. Uh, you know, if you're not able to find people to lend, we've discussed this before, the billions and billions of dollars that you think there's demand for, right? If the market's not willing to provide that financing at those kinds of prices, the business will simply dry up.
Which
Because
would be
now, if you want to
which
do that, you can buy one of these DAT stocks and you can
yeah.
margin that however you normally margin. I mean,
Yeah, yeah.
whatever. There's margin limitations, but that's all available for leverage. So this way of getting leverage or of cashing out without whatever always seemed sort of dumb and contrived. And I suspect that this will signal kind of the end of that. Um, there's no losses. It's just a business that you know, well, there may or may not be losses in the future, but it's a business that just sort of nobody wants to, do.
Which would be
We'll
in
see.
many ways it might be a natural and kind of a less the least worst outcome if it just wound up and went away quietly, as opposed to it getting turbocharged. And then I just can't see how that would happen anyway. But
You're not going to have professional investors willing to loan at, 5, 6, 7% on
yeah,
pay in kind,
yeah.
completely
I
collateralized.
just
That
don't.
just doesn't seem likely to happen,
It
right?
doesn't seem
And
likely
we're
to
at a
happen. Yeah,
we're at a sort of loose point of the credit cycle. Credit
yeah.
tightens a bit from here. It seems impossible. These, uh, having to maintain the portfolio interest rate weighted average at least 9.25%, that is a That is a high, it's a
Mm-hmm.
high interest rate for what are short-term loans.
Yep.
All right. Now I know that on the amount of dollars borrowed, it's really only whatever
I mean, the
five,
absolute
six.
terms are not. Yeah. Okay. And on that note, thanks for tuning in. If you got any questions or comments, please hit us up in the comment section below. But otherwise, thanks for tuning in, and we will see you again back on schedule next week. Thank you very much. Bye.